morning, good afternoon, good evening, traders from across the globe, and welcome to the 1422nd edition of Short-Term Trading Live with Oscar. Good evening, traders. This video coming to you on a Sunday evening for trading Sunday through Monday, January 11th, 2016. Traders, you know that futures trading is extremely risky, causes substantial financial loss, is not suitable for all traders, should not be traded by almost anybody unless you've got risk capital, and know that you should always put your stops in first. So what's going on at the OMNI Trading Academy down at livewithoscar.com? Let me show you. This is cool stuff. Traders, I showed you this chart in my last video and in the one before it, if I'm remembering correctly. This was a chart of the emini S&P, the weekly bar chart, and I basically stated, I believe it was on January 3rd. On January 3rd now, we're here at the 11th. On January 3rd up here, I stated, I did a video, in fact, I named the video, in plain English, I named it, Oh Crap. That was the name of the video because it looked so horrible what was going to happen. I thought, wow, big problem. So I titled my video on the night of 1/3/16, oh shit, in plain English. And the market was up here. And I went, oh no, I don't like what I see. This is going to get ugly. Here's where we were on the weekly. If you remember, I came out and said 3 times a charm. I don't know, but 1, 2. Will this make number 3? Will the market dump? So here we were back on the 3rd of January, and I labeled that video, oh crap, or oh shit, if you will, and we tumbled towards number 3. We're not there yet, but we're on our way. So this is where it was the night of this video title, and this is what happened so far. Wha-bam! That's a huge drop towards number 3. Now, maybe it doesn't look like much when you're looking at it on the weekly. So let's go look at it. I got a daily chart. Let's go look at it on a daily chart I've got. Let's see, right here. It could take me a month to explain this chart to you, so forget everything else on it. Look back here. If you look back here, this is where we were in the S&P on the night of my video. The video titled, Oh Crap. We were here, and this is what happened. My goodness, it went wha-bam all the way down to here. Let me remove some of this so it's out of your view, because an incredible thing has happened here. We were all the way up here, and this thing tumbled all the way to here so far since the oh crap video this night. So my goodness, has the S&P tumbled on a daily basis, weekly as well. So we've got a lot to look at. I just wanted to point that out to you, and let's move along. So looking at some of the same charts we looked at in the last 2 videos, let's go here. Chart number 4. Dow Jones Transportation Average Weekly Chart, the new chart masterpiece. Remember, I showed this to you in my last 2 videos. We call this do or die territory. And you know what, traders? We are still at do or die territory. Look where we are. The 200 bar moving average. Let's just dissect this chart a little further. The highest the stock market had ever been was here when it traded 1576 in the emini S&P back in 2007. It's the highest it had ever been back here, and then boom, we started to drop. We were blessed with OMNI actually calling the high before we ever got there, and it was correct. Then we started to drop all the way down here to the crash lows of 2009. We penetrated the red 200 bar moving average and started to dump. So crash low here, 2009. Keep this area in mind as I move the chart over. That's the beginning of this bottom blue trend line. Then we start to rally, and boom, we have a dip of 2011, a really sizable dip in 2011. Bang, 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 all the way down. And that gives us the second leg of this wonderful channel that we're in, the top and bottom of this channel. So it lands right there, and boom, it holds, and we move on. Well, look where we are now. The same exact spot. 200 bar moving average and approaching the channel that goes all the way back to the crash lows. Where are we here? 200 bar moving average and touching the channel that goes back to crash lows. Very interesting, isn't it? This is do or die territory, traders. I kid you not. We need to hold here. Let's look at another chart. You know what? Before I move further, let's keep this in context here. This started in 2009, this channel. We have been in a booming bull market since then. Excuse me, let me just get this out of our way. I don't know why it's still here. We have been in a booming bull market since then. Look at it, all the way up. So I am not going to tell you that the bull has to be over and it's done. But I am here to say that we're in an area that I like to call do or die. And if it does not fail to hold and it starts to die, we may very well have to say goodbye to our bull market. But once again, let me reiterate, it's been in the bull market for a long, long time. I am not ready to count it out yet. But if you go back to about here, the Omni started fluttering right about here. The Omni started to tell us that we were having trouble. Go look at my videos. Sometime in October, the Omni told us we were beginning to have trouble in this market. And I removed do not fall in love with the downside off my board. And I started to say maybe we're going to fall in love with the downside. The market basically did this since then, and it has started to drop. In fact, here is where the Omni started to flutter. My bad. The Omni started to give us signals of fluttering right in here. And since then, this has what happened. So the Omni has been very brilliant in calling what could have been the top right before it started. Then right about here, my old crap video comes out, and the crap hits the fan. Right about here, the old crap video comes out, and we have dumped ever since. So Omni's been pretty smart. Pay attention. Omni's a pretty darn good indicator. Let's look at another chart here. The Russell 2000. Look at this bad boy. This goes back to the crash lows of 2009. Look. You think I'm kidding? That's the crash low of 2009. Watch this trend line. Follow the bouncing ball. It hits again here in 2011. Look where we are right now. The other leader of U.S. indices, the one I just showed you, was the Dow Jones Transportation Average, deemed the leader. This is the Russell 2000, the secondary leader. Look where it is now. Do or die, I kid you not. This is do or die part 2. Keep your eyes on this. So that's your Dow Jones Transportation Average and your Russell. Let's go look at the Dow Jones Industrial Average. Dow Jones Industrial Average, not much of a difference here, traders. Crash lows back here, right? You can see where the crash low is, right there where it's pointed out. Market has broken the trend on this chart and is heading down towards the 200 bar. Will we break it and get to 15.76? I think we could. 15.7630, that's where this starts to come in. I think we can get down there. Dow Jones Industrial Average Weekly. But remember, this chart starts at the bottom left and goes all the way to the top right. It is not a bearish market. It is a market having trouble. We did just have an interest rate hike. Maybe it's a simple setback because of the interest rate hike and not the top. Don't condemn the market just yet. Let it condemn itself. So you've seen the emini S&P. You've seen the Dow Jones Transportation Average, you've seen the Russell, and you've seen the Dow. That's enough convincing that we are in a bull market that is absolutely setting back and needs to come back a bit further. So that's what we're looking at for now. If it turns into a full-blown bear market, we'll deal with it. Then, traders, you've got gold. Let's go look at a gold chart. Interesting chart. I have been telling you in my last few videos, gold is starting to run on the upside, and we are buying the dips. This is what it has done since then. It has ran towards the upside. So why I wanted to present you with this chart this evening, this gold chart, was for this yellow average. Watch what happens. Let me go back a little bit. You get above the yellow average, you get a spike. You get above the yellow average, you get a spike. Above the yellow average, you get a spike. We're day traders. We're not looking for the world here. Above the yellow average, you get a major spike. Right? You get above the yellow average like we are now. Shouldn't we get a spike? Come on, that part of it's easy. Then we broke out of a wedge. The OMNI is bullish. You're above the average, blah, 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 blah. There's a lot of reason for day trading to want to buy the dips in gold. So for day trading on Monday, we will be buying dips in gold, looking for the market to move a bit higher. Traders, that's my presentation. I hope you like these nightly videos. I hope they're helping to keep you in tune with technical analysis of the markets and where they may be going starting this evening for tomorrow. Traders, remember to keep your emotions out of trading. Come join me at livewithoscar.com and I'll help keep your emotions at bay. But if you can't do that, you remember to say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Traders, rock and roll. I'll see you all at livewithoscar.com.